Hello and welcome to this video. In this video, we are going to solve for paper 1, variant 2 of Principles of Accounts, and this is for year May-June 2012. So let's begin. Multiple choice 1, applying the money measurement principle, what is recorded in balance sheet? So in this multiple choice, it is asking me which of the following items would be recorded in the balance sheet. So let's look into the options. Better staff morale following redecoration premises. No, because you cannot record motivation of employees in the balance sheet. This is what the option is trying to say. So motivation is not recorded in the balance sheet. Improved public roads to the business premises. No, this is a step taken by government. So this has no accounting implications on specific. Uh, this has no accounting implications on balance sheet. Increase in efficiency following staff training. Again, staff training is an expense, and this would be on income statement, not on balance sheet. Installation of air conditioning to improve staff comfort. Yes, this is the correct option because air conditioning is a fixed asset. It's a fixed asset, and that would surely be reported on the balance sheet. So the correct answer to multiple choice option 1 is D. Multiple choice 2. Businesses make use of both bookkeeping and accounting procedures. What is the purpose? The purpose, this is the key term here, the purpose of bookkeeping. So what is the purpose of bookkeeping? To interpret the double entry records? Yeah, you can say that, but this is more about interpretation and not the purpose. To prepare financial statement at regular intervals? No, financial statements are prepared from trial balance. Financial statements are prepared from trial balance. To record all financial transactions of the business? Yes, this sounds about very right, but let's look into option D as well. To summarize the financial position of the business. No, this is a classic definition. This is a classic definition of balance sheet. So the correct option to multiple choice 2 is option C. Multiple choice 3, which would be recorded by a credit entry in an account. So for to solve this multiple choice, you need to know debit and credit rules. Debit and credit rules. I actually have another video on my basic accounting series regarding debit and credit rules. So if you would like to watch that, please feel free to do so. Let's look into the options. A decrease in capital, no, because this is always debit. A decrease in liabilities, no, because this is always debit. And the question is asking me for a credit entry. An increase in asset, no. If there's an increase in asset, that is debit. An increase in capital, yes, this is right. An increase in capital is always credited. So the correct answer to multiple choice 3 is option D. Which is true of a computerized accounting system. So a statement which is true for a computerized accounting system. So let's look into the options. Anyone with a computer can gain access to the accounting records. Yeah, well, you have a computer, you can access to the accounting records if they are not password protected. If they are not password protected. So this is not a complete statement. So probably not true, most likely not true. Option B, data input can only be used for one specific purpose. This is not necessarily true as well. So no, data output can only be understood by computer programmers. Not necessary, not necessary. Operator error may result in inaccurate information. Yes, this sounds about very right because if you make any error in the entry, this is a data entry error, and that is very much possible for computerized accounting system. Data entry errors can occur because of human error. Operator error is also would also be commonly known in practical life as human error. So the correct answer to option to multiple choice. So the correct answer to multiple choice 4 is option D. Multiple choice 5, which is the accounting equation? Now this is a repeat question. This is a repeat question. This is a repeat question from May, June 2010, paper 1, variant 2. So let's look into the options. And this is also a fact-based question. So everyone should know what accounting equation is. So asset minus, no, we don't have current. So this is outright. It's absolutely wrong. Asset minus liability is equals to owner. Yeah. So this is sounds about very right. But we will look into option C and D. No current assets. No, not no. This is these C and D are absolutely wrong. So the correct answer to multiple choice 5 is option B. Wine has sent the following business documents to Len, a customer. So Wine is the seller and Len is the customer. So Wine is the seller and Len is the customer, or also commonly known as accounts receivable or trade receivables. There was no opening balance on Len's account and no payments were made by Len during January. So January is the keyword. We are talking about January in here. What is the amount to be paid by Len to clear his January account? So this is only concerned about January, how much Len has to pay for his January account. So let's look into the option. So let's look into the options and for the calculation. The company sold goods worth of $250 on 1st Jan, then on Jan 12th, and then there was a credit note on Jan 14. So we are only concerned about January transactions. We would disregard the February transaction. So since this is an accounts receivable, so 250 plus 370 plus 480 minus 90, and the total that you would get in here is 1010. So the correct answer to multiple choice 6 is option A. Which document is issued to a customer to show all the transaction that have taken place during a month? This is again a repeat question. This is again a repeat question from May, June 2010. So the correct answer to this, so you have to pick an answer which will show all the transaction, and we know that is always statement of account. That is always statement of account. They haven't used a proper term in here, statement of account, but all these option A, B, C are not in line with the definition or with the question requirement to show all transactions. Hence, the answer to multiple choice 7 is option D. Let's move on to multiple choice 8. Hassan maintains a sales journal, purchases journal, sales return journal, and a purchases return journal. At the end of his first month's trading, Hassan transfers the total of each of these journals to the journal ledger. Which entries will Hassan make his journal ledger to record these totals? So in here, you have to make debit and credit. Therefore, knowing debit and credit rules are important. Knowing debit and credit rules are important because I will tell you a trick in here, and that would make this multiple choice very, very easy. So Hassan is maintaining a sales journal, purchases journal, sales return journal, and purchases return journal. Sales journal would have a credit balance and a purchases journal would have debit balance, right? So you need to search for which options do credit sales and debit purchases. And you would see that it's only option D. If you look at option A, B, C, account to be debited sales, this is absolutely wrong. So option A could be immediately eliminated. For option B, let's look into this. They have been crediting sales, but at the same time, they credit purchases. So this is wrong. This should be on this side. Purchases will be debited. So option B is wrong again. And option C, again, what they did was just, it's a flip of option B. So option C is wrong as well. Even if you use eliminating options, you will arrive at option D. So the correct answer to multiple choice 8 is option D. Let's look into multiple choice 9. Jane, a trader, withdrew $50 from business bank account for office use. How is this recorded in Jane's book? So how would Jane record this in his own books? So Jane withdrew $50 from business bank account for office use. So there would be credit bank for sure. So if you look at the options, it would be either C or D. So option A and B are immediately eliminated. Now, to decide between option C and D, you need to look at the purpose why Jane withdrew $50 from the business. He or she withdrew $50 from the business for the office use. So option D is immediately eliminated because it's not drawings. It's clearly not drawings. Hence, the correct answer to multiple choice 9 is option C. So credit bank, debit cash. Multiple choice 10. Anne is a trader. On 1st April 2011, Cindy's account in Anne's General showed a credit balance of 520. So Anne is the trader and Cindy is the accounts payable because Cindy has a credit balance in Anne's account. So the following transactions took place during April 2011. April April 2, N returned goods $30 to Cindy. April 14, N bought goods of 210 from Cindy and paid cash. Which statement is true? Which statement is true about the balance on Cindy's account in N's ledger on 30th April 2011? So Cindy's account, this is an accounts payable, had an opening balance of 520. On April 2, N returned goods $30 to Cindy. So now Anne has to pay $30 less. And then on April 14th, Anne bought goods worth of 210 from Cindy and paid cash. So this would have no implication on accounts payable account. So 520 minus 30. So you would have a debit, so carried forward 490 here, and then credit brought forward, which would be a credit balance of 490 here. So Anne owes Cindy $490. The correct answer to multiple choice 10 would be option A. Multiple choice 11. A trial balance fails to agree. So a trial balance fails to agree. It did not agree. The credit column totals $10,000. Two errors are then found. The sales journal has been overcast by $100, which means that my accounts receivable has been undercast by $100. So I have to reduce my sales journal by $100. Goods sold to Y on credit for $200 have been incorrectly debited to X. what is the total of the debit column in the trial balance. So we need to look at we need to calculate the debit we need to calculate the total of debit column of the trial balance. We would assume that debit is always equals to credit. We have been given current balance of $10,000, and we would assume that debit is, we will take this as our base figure, $10,000. We would look into error 1 and error 2 now. So the sales journal has been overcast by $100, which means that I have to reduce my accounts receivable by $100. Accounts receivable uh, are of a debit balance nature. So accounts receivable would have a debit balance. The particular error tells me that my accounts receivable are overstated by $100. So um, I would reduce that by $100 in here. So this comes to 9,902. Now we are going to look into error 2. Goods sold on Y on credit for $200 have been incorrectly debited to X. Now this is correct. This would have no effect on our debit column because they just wrongly debited to customer X instead of customer Y. This has been correctly recorded. Correctly recorded. It's just that it has been recorded. It has been recorded in a wrong customer account. Correctly recorded in a wrong customer account. So the entry is fine. It would have no effect. Therefore, the correct answer to multiple choice 11 would be option B, 9,900. Multiple choice 12. Azad maintains a ledger account for general expenses. On 1st January, there was a prepayment of $176. On 31st December, there was an accrual of $212. The amount transferred to the income statement for the year was $10,690. What was the total paid for general expenses during the year? So you need to calculate the general expenses, total general expenses. Uh, Total general expenses, we haven't been given the year, whether it's 2010 or 11, but we need to calculate the total expenses, total general expenses. That would be just the total sum of 10,690 plus the accrued amount of 212. Because this is prepaid, this would have no effect on the total paid for general expenses. So the correct answer to multiple choice 12 would be option A, 10,302. Multiple choice 13. Winston decides to write off a debt due to him from Liore for goods sold on credit. So basically, it's saying that there's this customer Liore and Winston does not expect Liore to pay at all. So it's a bad debt. How is this recorded in Winston's book? So this is important. How Winston will record this in his books. So the account to be credited would be a Leary, that's for sure. So you can immediately eliminate option B, C, and D. The correct answer to multiple choice 13 is option A. So account to be debited bad debts, because this is an expense, and then you would reduce the accounts receivable, and the name of the accounts receivable or the customer name is Leary. So correct answer to multiple choice 13 is option A. Multiple choice 14. Motor repairs of $250 have been posted in error to motor vehicles account. So expense has been posted in error into motor vehicles account. This is again a repeat question from May, June 2010, paper 112. What is the effect on the financial statements? So we are being asked about the effect on the financial statements. So our non-current assets would definitely be overstated. So it's either option A or option C. So you can immediately eliminate option B and D and come down to 50-50 choice. Now you have to see the effect of posting this error into motor vehicles account, what would be the impact on net profit? So my expenses have been understated. This would make my expenses understated. Expenses understated. Therefore, my profit would be overstated. My profit would be overstated. So the correct answer to multiple choice 14 would be option A, because option C says profit for the year would be understated, which is not true. So the correct answer to multiple choice 14 would be option A. A machine was purchased on 1st January 2010 for $12,000. So this is the cost of the machine. It has a working life of 8 years. So this is the life of the machine, 8 years, which would be sold for $2,000. So this is my salvage value, a residual value. Depreciation is calculated using the straight line method. So depreciation method. What was the net book value at 31st December 2010? So the year when it was purchased was 2010, 1st January 2010, and we are being asked to calculate the net book value at 31st December 2010. So basically, depreciation would be charged for 1 year only. Depreciation would be charged for 1 year in this question. We need to look at the formula for net book value. If you the formula for net book value is always cost minus the accumulated depreciation. Cost in this question is 12,000. We need to calculate the depreciation using the straight line method. So to calculate depreciation, I would take the cost minus the residual value and then divided by the life of asset. So 12,000 minus 2,000 is 10,000. 10,000 over 8. This would give me 1250. So that would be my depreciation expense, 1250. So 12,000 minus 1250 would give me an answer of 10,750. So the answer to multiple choice 15 would be option C. Multiple choice 16. The difference on a trial balance is entered in a suspense account. A payment of $112 for general expenses had been correctly entered in the cash book but posted in error to the credit side of the general expenses account. So expenses are always debited. They have a debit. So expense is a debit nature account. But the company accountant wrongly credited the general expense account. So this is an error. To correct this error, we need to debit general expense. And of course, our credit would be suspense account. So we would search for this entry in our options. So this meets the definition, but the amount is wrong. This option B is incorrect. Option C meets the definition, and option D is also incorrect. So you can immediately come down to 50-50. And you have to choose between option A and option C. Option A is wrong because I have already recorded. Option A is wrong because I have already recorded general expenses on the credit side. So my credit side is always it's already on 112. And if I debit general expenses by 112, it would come down to 0. So plus minus, there would be no impact, but I need to record the general expenses. Therefore, I would debit double the amount than the credit, and I would get a balance of 112 on the debit side. This is what I need to correct this error. Therefore, the correct answer to multiple choice 16 would be option C. Option C would be the correct answer to multiple choice 16. Multiple choice 17. Which total is shown by the closing balance on the purchases ledger control account? So purchases ledger control account is about accounts payable or trade payables. So the correct answer to multiple choice 17 is option C. 17, option C is the correct answer. Which affects both gross profit and net profit. So gross profit is basically the difference between sales minus cost of goods sold, and net profit is the difference between gross profit minus the expenses. So once you have the formula, by looking at the formula, you would search through the options which would affect my gross profit and net profit. So the answer to multiple choice 18 is option A, carriage inwards. Carriage inwards is the transportation cost which affects purchases or is included in purchases, which is um, purchases is in the COGS formula. So carriage inwards would be included into the total purchases cost. Total purchases cost would affect the cost of goods sold. Cost of goods sold in return would affect the gross profit, and the gross profit in return would affect the net profit as well. Therefore, the correct answer to multiple choice 18 would be option A. Multiple choice 19. How is capital employed calculated? So capital employed is, there are two sources of capital company can have: loans and equity. Loans and equity. So the correct answer to multiple choice 19 is option B, because capital plus non-current liabilities. So non-current liabilities are loan and capital is basically equity. So your capital employed is sum of capital plus non-current liabilities. In accounting equation, this is the part of capital employed. Hence, the correct answer to multiple choice 19 is option B. Which is not a service business. Hairdresser is a service business. Manufacturer is not a service business. Private tutor is a service business. Window cleaner is a service business. Hence, the correct answer to multiple choice 20 is option B. Rajat and Sunil formed a partnership on 1st January 2010, but did not prepare a partnership agreement. They provide the following information. Capital introduced on 1st January 2010. Rajat introduced 40,000 in the business and Sunil introduced 20,000. During the year ended 31st December 2010, drawings, Rajat had drawings of 5,000 and Sunil had drawing of 3,500. The share of work is 50-50. They decide to draw up a partnership agreement for future years. Which of the following adjustments to the partnership agreement would be most beneficial to Rajat in 2010? So, which of the following adjustments to the partnership agreement would be most beneficial to Rajat in 2010? So, adjustment that would be beneficial to Rajat in 2010. So now let's look into the options. Interest on capital. Yeah, this sounds very right, because if he decides on a higher, if they decide on interest on capital, because since Rajat has introduced a lot more capital than Sunil, Rajat would get more benefit by getting more interest on capital. Interest on drawings, no, this would penalize. Limit on annual drawings, this would penalize again. Partnership salaries, this is about partnership agreements, so not really relevant, because the question is asking which would be most beneficial to Rajat in 2010. So the correct answer to multiple choice 21 is option A, because Rajat introduced $40,000 into the business, and if they decide on the interest on capital, Rajat would get more interest on capital, and therefore the correct answer to multiple choice 21 is option A. Multiple choice 22. The Sandhill Golf Club has 150 members who each pay annual subscription of $40. So 150 times 40. On 1st January 2010, subscriptions paid for 2009 amounted to 480. This is unpaid. So unpaid subscription amounted to 480. On 31st December 2010, subscriptions paid in advance for 2012 amounted to 280. What was the total? So what was the total of subscriptions received from members in 2010? That would be sum of 150 times 40 plus 480 plus 280. So this amounts to 6,000. 6,000 plus 480 plus 280. So the correct answer to multiple choice 22 is option D, 6,760. Multiple choice 23. A football club provided the following information at the end of its financial year. Rent of premises paid in advance, outstanding subscriptions from members. Where will these items appear in club's balance sheet? So these two items, where would they appear in company's balance sheet? Rent of premises paid in advance. This is a prepaid expense. This is a prepaid expense. This is a prepaid expense and is classified in current assets. I also have a video made on prepaid expense. So if you would like to watch to clear your concept, please feel free to do so. Outstanding subscriptions from members. So this is a form of accrued revenue, because you have, or the club has the right to receive these subscriptions, outstanding subscriptions from its members. Therefore, this would also be classified as current asset. So we would search for option which says current assets on both, and that is option A. So multiple choice 23 answer would be A. Multiple choice 24. Tarrant produced a statement of affairs. They produced a statement of affairs at 31st December 2009 and at 31st December 2010. During 2010, his long-term loan increased by $3,000 and his net current assets decreased by $1,000. Depreciation for the year was $500. By how much did the total of Tarrant's capital decrease? So let's look into the accounting equation and see what's happening. So my asset side decreased by $1,000. Depreciation will also decrease it by further $500. I got a loan of $3,000 plus the equity, and I have to calculate this and what would be the effect on my equity. So minus 1,000 minus 500 minus 3,000 equals to E, and that will be minus 4,500 is equals to E. So the decrease, so this negative sign shows the decrease, indicates the decrease, and the amount that it has decreased by, the capital employed has decreased by 4,500. So the correct answer to multiple choice 24 is option D. Let's look into multiple choice 25 now. A limited company provided the following information. Issued share capital, 50,000 ordinary shares at $1 each. So I have $50,000 of ordinary share capital. Profit for the year ended 30th June 2010 before appropriation. So before distributions, I had a net profit of $13,000, or the company had a profit of $13,000. Transfer to general reserve on 30th June 2010 was $6,000. So out of 13,000, I transferred 6,000 to general reserve. An interim ordinary share dividend paid during the year was $3,000. So out of 13,000, 6,000 went to general reserve, 3,000 was interim. 6 plus 3 is 12,000. I still have $1,000 left. On 30th June 2010, it was decided to use the remaining profit to pay the final ordinary share dividend. So this $1,000 was used to pay final final dividend, final dividend. What percentage final dividend would the ordinary shareholders receive? So we need to calculate what is the percentage of final dividend that would have been received by ordinary shareholders. So our interim ordinary dividend was 3,000. Our final dividend was 1,000, and then our capital employed is 50,000. 50,000 shares at $1 each. So we have number of ordinary shareholders as 50,000. So it's 4,000 over 50,000. 4,000 over 50,000. This gives me an answer of 8%. Therefore, my correct answer to multiple choice 25 is option A, 8%. Now let's look into multiple choice 26, which appears in the appropriation account of a limited company. So appropriation account is basically showing the distribution of company's profit. So what would be shown in the appropriation account? Debenture interest paid, no. This is an income statement. Director salaries, no. Investment income received, no. Ordinary share dividends, yes. So the correct answer to multiple choice 26 is option D. Multiple choice 27, which is a direct cost? Depreciation of machinery, no. Lighting and heating, no. Raw materials used, yes. Supervisor's wages, no. So the correct answer to multiple choice 27 is option C. Direct cost. Type of direct costs are basically direct material, direct labor, and any direct expenses. So these are types of direct cost. So the correct answer to multiple choice 27 is option C. Multiple choice 28. An employer provides each employee with a timesheet. Which statement is correct? So we need to identify the correct statement in this question. It is completed by the employee. Yes, it is completed by the employee to calculate the hourly rate of pay. No. If an employee has given the right to calculate the hourly pay, there would be a lot of fraud going on, because then you can just charge your employer crazy amounts for your salaries. Option B, it is completed by the employee. That's true. To show the hours spent on each job. Yes, this makes more sense. But let's look into option C and D as well. It is completed by the employer. No. So option C is eliminated. It is completed by the employer. No, it is not completed by the employer because it has been given to the employee. So option D is also eliminated. Option A is wrong because employee decides for the hourly pay rate. That's not true. So the correct answer to multiple choice 28 is option B. Multiple choice 29. Jake had current liabilities of trade payables and had current assets of inventory, trade receivables, and cash. So this statement is basically telling me what are the current liabilities for Jake and what are the current assets for Jake. Which measure would improve his current ratio? So how do we calculate current ratio? Current ratio is basically current assets divided by current liabilities. Buying additional inventory and paying cash, no, this is just moving money from inventory, from cash to inventory. So this would not increase my current ratio. Decreasing drawings, yeah, that's kind of true, because then I would have more inventory available for sale. Revaluing non-current assets, this is absolutely wrong because this has no implication on current ratio. Option D, selling inventory on credit rather than cash. This is again just a movement of money from inventory to accounts receivable or trade receivables. So no effect. So option A, C, and D are absolutely wrong. Hence, the correct option for multiple choice 29 is option B. This is the correct option. Multiple choice 30. An international company has prepared financial statements without including very small items small items of furniture in its non-current assets. So what the statement is basically telling me that very small amounts of furniture have not been included in non-current assets. They have not capitalized it. They have not included in their fixed assets. Which accounting principle has the company applied? So this question is again about accounting principle. So if you have noticed in all the years, there's always a question on accounting principle, which highlights the importance of knowing accounting principles because these are very basic and you should know them very well. Accounting entity, no, this is a wrong concept. Dual aspect, no, this is not dealing with non-current assets at all. Going concern, no. Option D is the correct answer. It's about materiality. Therefore, the correct answer to multiple choice 30 is option D, because it's about the material amounts. So since these items are very small, they would be not very much worth it. Therefore, the company just excluded them from their non-current assets. Therefore, the correct answer to multiple choice 30 is option D. Thank you very much for watching this video. I hope this video was helpful. So if you find this video useful, please give it a thumbs up and subscribe to my channel for more of such videos. Thank you very much.